Greetings, ADK Wealth Advisory Group, community and financial planning world. Dan Davis coming to you August 2nd, Friday, from the St. Louis office. Kind of go big picture. We typically do these quarter end, and we're coming at the end of July, beginning of August, because there's just so many things that are sort of pre-election oriented. We'll start with the stock market. Would have to say I'm really surprised in a good way with how resilient the stock market's been so far this year. If someone had said that the geopolitical unrest that's been going on in the Middle East would have happened, specifically Iran attacking Israel, and that the markets would respond negatively one day and pretty much recover quickly after that, I would have bet against that. So it does, again, show you just how resilient the stock market's been. We're now experiencing a little bit of turbulence. Is that the turbulence that I thought would come in April to July, and it's still pre-election and we're hitting it now? Too early to tell, but the portfolios are pretty much set up to ride through between now and what I call is that window, election window. And what do I mean by that? It's like a month before the election to once power is actually determined. There could still be seats that are contested, but once we know who's in charge of the three chambers, that's the end of the window. And so in that window, we'll get back to being risk on, assuming that the economy stays as is or the deterioration is super slow. So bond market, again, been pleased with it since our last video. The last video, bond market had been kind of beat up a little bit because the Fed hadn't raised rates yet. Well, we're sitting here at the beginning of August, and most people believe that the Fed will lower rates in September. Kudos to LPL's research team. When you think about end of year 23, the markets had sort of been a little bit overly optimistic, thinking that the Fed would lower rates 5+ times, and LPL's research team said pretty doubtful, maybe 3, maybe 4. And we were in that same camp, and now it looks like that what's realistic is 2, maybe 3, but probably 2. Bond market's responding to that. If you take a look at all the bonds that we're using, they're finally in positive territory for the year. So again, our thesis on the bond market is that it's in recovery mode. It's going to take multiple years to get that done. But we do think that we're now at a stage where bonds will start to outperform cash, which we haven't seen that year to date. So it's nice to be in a position. Economy, if you take a look at the Fed, alluded to that earlier. If you really look at inflation, unemployment, GDP, you've heard me talk in terms of the economic cycle, and all cycles end at what I call as end cycle or recession. Then you have recovery, and that's where the best returns happen. Then you have mid, and then you have late and end. So we're somewhere towards the end of mid or the beginning of late. Always impossible to have precision on that statement. Why that's important, though, is that once the election's over, if we still feel like we're close to that, we'll go to risk on relative to stocks and bonds, and probably think in terms of 18 to 24 months being in that position, but that's all data driven. One warning, having done this now for 36 years, I am brought back to a meeting that I had with one of my favorite managers when I was just a wee lad in the business. And we were up in New York, and it was election year, and he made the statement that he found it interesting that every presidential political cycle, that if you vote blue and red wins, or you vote red and blue wins, that you think the world is going to fall apart and that America is going to flush down the toilet. And I see that with our clients. I've already started to get calls about election stuff, and my statement's relatively simple, and that is that the markets don't like political uncertainty, but they really don't care who wins. Now, if a Bernie Sanders or something like that won, that's a different thing. But blue, red, however you vote, the reality of it is that the markets like the decisions being done and the power handling in a way that it's split. So they really don't like all blue, all red. They like it to be a little bit of a quagmire, so no radical stuff is done. So resist the urge to call me telling me that the world's going to fall apart if Trump wins. Refuse to do the same thing if Harris wins. Just keep your composure, knowing that the stock market and the bond market do their thing regardless of politics. And on a personal note, something I haven't really disclosed much because it's been kind of heart-wrenching, is just finished a divorce after 25 years being married. It's not really something that I've talked about because when I'm working, that's the last thing I really want to think about. I probably still won't bring it up for a while to people when we're in meetings just because it's still a little raw for me. But I feel like there's a lot of personal stuff that you share with me. I wanted to share that with you as well. And I also want to just thank you for the 36 years of trust that you've placed in me and my team. It's really, as you go through some of these difficult life challenges, you start to think about what am I grateful for? And the career that I've had and helping you is one of those things. So thank you very much for your trust. We're here for you. Our team continues to grow. Very excited about the young talent on our team, and signing off from St. Louis with a great gratitude. Thank you.